Hey, good morning. Let's go over today's trade plan. So in the overnight session, buyers were active at the 28.5 to 31 area, and that ended up being the launching point that launched ES to beyond yesterday's high of 2140, and that's going to be the main support area on the day. Heading into the open, we are going to be keeping an eye on yesterday's high and 37 to 39. That area is going to be used as the micro bull bear zone. If we continue to hold above it, it would be a signal that the overnight buying that we've seen is legitimate, and it could lead to a test of higher prices at 44.5 to 46.5 and 48.75 to 49.75, with potential to even test 51.75 to 53.75, although we would be exhausting the range by the time the market got up into the 51.75 to 53.75 zone, and that area can cap the upside. But right now, the main question that we're going to be answering heading into the open is whether this overnight upside move is legitimate and it's going to sustain and continue. Now, the move happened on above average volume, so we are going to give the benefit of the doubt to buyers, and that's why if we continue to hold above 37.39, it would be a sign that the buy side is indeed active and we can test higher prices. In the event of a break below 37, buyers can still be active at 33.5 to 35.5, but again, we have to consider the environment in real time and question whether we are seeing any signs that are completely invalidating that entire upside scenario. Because in order for a long setup to work off of 33.5 to 35.5, the overall market environment still has to be strong enough to justify a move back above 37 to 39 and back above 2140. So if we're heading down into pre-market support on broad market weakness, on a lot of downside momentum, and let's say with Russell even breaking its lows from the overnight session or from yesterday, in that case, 33.5 to 35.5 is not going to be a good spot to initiate a long because it is the middle of the balance. And if the upside is done, and now we're seeing signs that are telling us that we may not really bounce much, then 33.5 to 35.5 is not going to be a zone to initiate a long. On the other hand, if the market is simply putting in a pullback without really any big downside momentum, if Russell is still holding its market structure from the overnight session from yesterday, and we're not seeing any broad market weakness, things are still fairly neutral, then perhaps 33.5 to 35.5 could be taken as a long setup. And then in order for that long to work, we'd want to see it getting back above 37 and 39 and 2140. And if we continue to struggle there, then again, it can be a warning sign. Below that, the main support zone on the day is 28.5 to 31, and buyers can defend that area on first test. In the event of a break below that, the next area of support is going to be 23.25 to 25.25, and again, responsive buyers can be active there, and in order for the market to break that zone, we would have to see broad market weakness and a lot of downside momentum with the Russell making new lows as well. So our default scenario heading into the day is going to favor the buy side, but because we are technically still trading within a range, within a balance, we have to still maintain that neutral bias on the short term and at least be open to a potential failure. So by default, we're going to assume that the overnight upside move is legitimate and that we are going to get some level of follow through on this buying. But if we are not seeing any continuation, if we're not seeing any sustained upside momentum or broad market strength, or we start seeing warning signs, then we need to take those into account because the market is still technically balancing within a range. This overnight breakout is simply a break above yesterday's high. It's not like it's a proper multi-day balance breakout that would carry a lot more weight. So because things are still fairly mixed, we still have weakness on the Russell overall. NASDAQ is approaching resistance. ES is still balanced. we have to still maintain that neutral bias and not get overly aggressive on the long side. And that means that if we're not getting some level of pullback, or if we're not able to secure a entry where there is sufficient reward to risk, then you have to skip it. You have to let it go. It doesn't make sense to buy it at a very high price unless there's just extreme upside momentum. And even then, you're going to want to lean on something in real time and, not just chase the market higher. So, because we are still in a fairly balanced state on the larger time frames, we have to be a little mindful of trade location and not just, take the trade at a very aggressive price where just a minor retracement or very normal rotation ends up stopping you out, and then the market ends up going where you thought it was going to go. So heading into the open, 44.5, 46.5 is the first area of resistance. If we can take that out, the next area is 48.75 to 49.75, marking the high from the other day, and then 51.75 to 53.75 is the next larger time frame area of resistance, and that area has potential to cap the upside. It's a range extreme, and it's also a larger time frame area of resistance. So we can definitely struggle there a bit, even if eventually we're going to take that area out. So those are the main ideas heading into the open. Let's see if the buy side can maintain the strength that we've seen in the overnight session. Let's keep an eye on the other markets, and we'll take it from there.